Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Ausbil to discuss its 130/30 Focus Fund is Deputy Head of Equities, Gian Pandit. Gian, welcome back.
Thank you very much.
Now, the aim of the fund is to outperform the ASX 200 accumulation index. So what does this translate to in terms of a number?
Well, we aim to be top quartile over the long term, which is generally about 300 basis points above the ASX 200. But we need to understand that the Ausbil 130/30 Focus Fund has a very unconstrained style. The market's too narrow. We have 70% of the market in 30 names. So what we do at Ausbil is look at all opportunities to outperform value and growth stocks, and the best opportunities are the ones that we select for this fund.
So what level of volatility does the fund exhibit?
That's a really interesting question. The volatility in the market is around 11% at the moment. The fund volatility is close to 12%. So it's a low vol fund, but if you look back in the last year, we've been cycling about 600 basis points of alpha, which is outperformance over the index. So we aim to have high returns with low risk.
So Gian, can you tell us what is a long-short fund?
A long-short fund looks at all the opportunities in the marketplace. We get opportunities by buying stocks and we want stocks to go up, but there's also an opportunity of short selling stocks and outperforming when the stocks go down. So a true long-short fund looks at all opportunities. Now at Ausbil, we have 6 analysts covering over 200 companies, and we look at the full breadth of the Ausbil ideas coming through, and we put the best long ideas and the best short ideas in combination, not in isolation, to drive 2 outcomes. We're here to drive alpha generation or outperformance, but we're here also to look at capital preservation. And what I mean by that is that the shorts act as a buffer in that portfolio when the markets do fall down.
Very good. So what's your approach to stock selection and risk management?
When we look at the approach, it's really grounded in our philosophy and process. Put simply, our philosophy is earnings and earnings revisions drive share prices, and we try and get those earnings right and early ahead of the curve. Our process is twofold. It's macro top-down and bottom-up. First, we start with a macroeconomic forum and an idea that translates into our sector weights. Secondly, as I mentioned, we have 6 analysts covering over 200 companies that do the due diligence modelling bottom-up work in giving us conviction in stocks both long and short. And it's from that very pool of stocks that generates our best ideas.
And Gian, now to the fund. How is it positioned and why?
The fund is cautiously positioned right here, right now. Since the Trump election, the market's rallied 15%. The ASX 200's on 16 times. The All Industrials Fund, All Industrials market is on close to 20 times PE. We are positioned 10% cash at the moment, so fairly defensively positioned. But we are overweight companies with very strong earnings profiles and companies that are in an earnings upgrade cycle. So we are overweight US earners and offshore earners, companies such as TWE, Aristocrat, BSL, and also companies that will outperform with interest rates going up, such as CPU and QBE. We are underweight the bond proxy sector. As you know, it's not only the companies that you are overweight that adds to our performance, it's companies that you leave out of the portfolio that adds to our performance. So those bond proxies which are subject to interest rate moves that will see their earnings deteriorate, we are completely underweight. So companies such as telcos, REITs, infrastructure. Now we are short, and I don't like talking about shorts that often, but in sector view, we are short the retail sector at this stage, and presently we're doing the work in regards to going short the housing cycle.
And finally, Gian, how has the fund performed over the quarter and further back?
It's been a very difficult quarter, hasn't it? Funds performed very well over the quarter, and over the last rolling 1 year, the funds hit over 600 basis points of alpha. And what's really good is that over the 5-year period, the fund's hitting its benchmark target of over 300 basis points of alpha.
Gian Pandit, thanks for the update.
Thank you very much.